Well, trading is closed on the 3rd of October, 2023. As always, we'll do our disclaimer, go over our calls, and make some predictions. This is my trading plan for Wednesday, October 4th. I can be completely wrong. Trade at your own risk. Also, I couldn't watch the market this afternoon. Won't be able to watch it tomorrow morning. Won't be able to watch it Thursday afternoon. So I'm just not able to watch it as carefully as I'd like to. Hopefully after this week I'll be back in my normal schedule. Look for the pattern with the early low, which is this. Tomorrow should have the early high. Looked for a big move, we got that. We had a target of 42.8925. I said unless we gap down smartly it should print. We gapped down smartly, so according to the rules the call's killed before the open. Still should print at some time, just can't say when. We have new targets from today's patterns. 42.58.49 optional. 42.3705 optional. And 42.3718. These optional targets, I had a computer program one time. I checked over one calendar year how often they'd print, and they printed the next day 95% of the time. I grant you that's not 100, but it's not bad. And if they don't print tomorrow, we'll forget them. This 42.3718 should print at some time. The preferred time frame is tomorrow, but if we gap down smartly, price remains on the table, but not the time. Early on, we got an option. We got an ultimate sell signal that worked. It's the optional higher target. MEJT says this drop is false, gives us the higher targets. Well, we had a nice low here, which I was hoping would hold. It doesn't have to hold for the call to work, because there is a stop loss on the marked stuff, and we haven't hit it. And it's based on closing prices, so until we close tomorrow, we're not going to know if we get stopped out. If we do get stopped out, his stuff says it fails in grand style. Anything's possible, but we still have sentiment indicators at extremes, usually seeing at or near market lows. Retail customers just are buying too many puts in relation to calls. We have the volume spike again. This is going to occur near lows, although I'd be happier if the spike was higher. Way back when we were up here, we talked about price targets under 4,200 cash. I thought that low was pretty good. Thought that was going to hold, but it hasn't. We're getting closer to sub 4,200 prices. Aren't really that far away. You have your 200-day moving average. That's around 4202, I think. It really should hold. And we had these Fibonacci targets in the 4160s, 4180s. I mean, in terms of points, it's maybe only about 1% away. If these things fall, I mean, it's just going to be kind of tough to stick with the bullish call, because they really should hold. Those are strong support. The wave count's going to fail if we undercut this high, and that's about 4,100. In percentage terms, that's not that much, but in terms of points, it might be tough to sit through if you're long. Well, we had this ABC. Going under it doesn't really kill the idea, because this could be an expanded flat. It also is possible to call this 1, 2, 3, and you're making a fourth wave, and then there'll be 5. But although it could be an expanded flat, it would still be a clearer picture had that low held, because that low had a lot of things going for it. If we go under it and quickly reverse, so Trader Vic 2B bottom, which can be pretty strong, but that hasn't happened yet. And until we start turning around, I can't say it will. Right now we dropped all day. Here's the close. It's over all these lows. That's maintained at the open. It's a bullish pattern, and we have higher targets. Now, if we gap promptly undercut these lows, you can't really count on it because what counts isn't this close, but tomorrow's open. But if we don't take this low out early, I think these numbers are all on the table. Wednesday's pattern should have the early high regardless of where we open. Sentiment indicators continue to show excessive pessimism, indicating the nearer low in terms of time. However, it would have been a much clearer picture for me had last week's low held. There are higher targets. Unless we gap down smartly, the rules call for them to print. Bears closed over intraday lows. Should say prices closed over intraday lows, giving hopes for higher targets to print. There remain targets under 4,200 cash. They have renewed life after today's drop. But as far as tomorrow is concerned, we need to gap and promptly undercut today's low. Now, the rules call for higher prices even if we don't close higher. So this hasn't killed the whole idea yet, and the excessive pessimism still gives me hope that the call for the recovery is going to happen. I mean, right now, we are dropping into a rising 200-day moving average with good fib support. We haven't hit it yet, but that's not far away. That's going to be tough to break through, especially with all this pessimism around. So tomorrow has the early high. I think we're close to a low, but I thought that yesterday too. It's a good thing that we have the rule that gapping in the wrong direction kills the pattern before the open. Same thing for tomorrow. There are higher targets. We gap in the wrong direction. I think the thing's off the table. But for right now, there's hope that we see these targets recover, at least the ones that were generated today. And at some time we should even see the one that was generated yesterday, because you could call this a wall with a gap, and these things fill, and you get resistance over the top of the wall, and often they fill reasonably quickly, although that seems hard to believe after the drop we had today. So we'll have to see how we open. I won't be around for the open, but it is a pattern with the early high. There are higher targets, and if we can hold on to these, there's a good chance for a recovery, even if this down leg is not done. And that's today's call.